Interesting. Oh, we are live. There we go.
Hey, how are you? We didn't know we were live. Thank you for joining for this session. I'm pleased to be joined by Zach, who is the co-founder and CEO of Plaid, which a lot of you probably know in part because it agreed earlier this year to be acquired by Visa for the tiny sum of just $5.3 billion. So Zach, I want to go back to when you founded Plaid, in part because you've said in the past that when you were doing it, it was kind of at the height of the Occupy Wall Street movement, and that you had a lot of people who really didn't understand kind of how to control their own finances, their own financial future. I wonder, do you see similarities between then and now, not just in terms of economic upheaval, but in terms of how people view their finances? We've obviously got everything on our phones, but does that mean we can actually control it? Or is there some kind of, big Borg out there that's really controlling it?
It's a really good question. And first off, as we get started, Dan, I just wanted to say thank you for everything that you write. I love reading the stuff that you put out there on the internet. I've been a subscriber of your newsletters for many years across a couple different hubs. And so thank you for that. Please keep it coming. So to get to your question, what does financial services look like when we started the company versus now? How do consumers perceive it, so on and so forth? So maybe let me just take us down memory lane for a quick second. If you think about the way that you interacted with your money a decade ago, it's very, very different. If, say, you needed to get a $5,000 loan, maybe you're refinancing credit card debt or something like that. A decade ago, what you had to do is you had to walk into a bank branch and talk to a banker. Oftentimes you were limited based on the geography that you're in. So maybe you only have access to one bank or it's a community bank or something like that. And you were kind of at the behest of the rate that they gave you. Maybe you comparison shop, maybe you visit two banks. But ultimately you don't have, it's not a marketplace. It's not a bunch of competition. And so consumers are getting the financial service that's offered to them. Fast forward to today, and it's dramatically different, right? Actually, let's take a stop 5 years in. 5 years in, we had Lending Club that was at scale offering the loan on the internet. That's a big improvement. So suddenly, instead of having to go into every bank, you could at least have two options. You could go to the internet, and you could go to your bank. Now today, you have hundreds of digital lenders offering you loans. No longer does physical proximity to your bank branch really matter. And frankly, it allows consumers to have much more control, have much more access. The rates have gone down in net. The quality of product has gone up. The quality of communication has gone up. People are thinking about things like credit building and really creating consumer-friendly loans, not just loans in order to have the bank make money. And that's a really good thing. When you think about the downturn in which we founded Plaid, I guess we started in 2012, but it was during Occupy Wall Street. It was in the wake of 2008. And the frustration with banks was incredibly high. Consumers
people felt they had gotten screwed over by the banks. I mean, their homes were being foreclosed. They felt they were screwed over.
Exactly. This downturn, there's less of that. There's less of frustration directly with the banks. There's frustration, yes, out there, macro. There's frustration with lots of different parties, and frankly, there's frustration with a virus that no one controls. But it's not as if there's as much backlash. And I think a big part of that is obviously the nature of the crisis. But when I look at it broadly, the quality of financial services available to the average consumer today is dramatically better than what it was. The access is higher, availability is higher. The consumer centricity of the financial ecosystem has gone up quite massively. I'm not sure how you measure that. I'm looking for a stat, but it really does feel like we've created a much more consumer-centric financial system over the past decade by really leveraging technology and putting the consumers first at the center of what they need in their financial lives. And Fintech has helped a lot with that, but the banks have really led the way as well.
So one other kind of founding or early Plaid question for you, which is, at least from what I've read, tell me if I'm wrong, that when you guys first tried to raise money for this and start pitching, nowadays it seems relatively easy for fintech companies to raise money from VCs. But when you first went out, you had a hell of a time and mostly got turned down, correct? And if so, was there something wrong with your pitch, or was there something wrong with them?
Well, that is very true. Inevitably, there was something wrong with our pitch. Like, we could have done better, right? People have raised more money for other businesses that were hard to explain as well. So when we first started raising, we actually started first on a consumer app. This was kind of before we landed on Plaid. We tried to build a series of consumer digital financial applications. And the very fair and very valid feedback on that was, hey, this app is not easy to use. It's really difficult. The infrastructure doesn't work very well. It's slow. It's laggy. The quality of data is not good. And so then that actually was great insight to us. So we said, all right, well, let's go solve the underlying problem. And then we did. Then when we pitched the underlying problem, we also had trouble raising money. That was largely because people assumed that you couldn't innovate in regulated industries. We're seeing this now with healthcare, where for a long time it was really hard to raise money in healthcare. Now people are being able to raise money in healthcare because they found channels and bits and pieces of it that you can actually operate in and grow really quickly. Financial services was really the same way in the early days.
That makes sense. And just, I realized we didn't do this. We probably should have. Can you give the 30,000 very quick pitch of what Plaid is I think most people probably know what you guys are, but the very quick description of what Plaid, kind of what the guts of it is, even though I know you're expanding.
Sure. So a quick tagline might be, we build the network for financial services. Our goal is to create the infrastructure layer that allows developers and small businesses, and frankly, innovators anywhere, to create new, better, digitally enabled financial products. So you can think of us as kind of an infrastructure layer that sits between a bank itself, and it kind of connects the data that a consumer needs, whether it's held at the bank or wherever else it is that the consumer holds their data, with the applications that a consumer needs to use. We focus on enabling broadly what we term Fintech. Fintech used to be just startups. So many of our early customers, Venmo is a really early customer, Acorns is a really early customer, Stash, like Robinhood, all these companies right when they were getting founded were Plaid customers, which is fantastic. But now it's really scaled to having a lot of really large enterprises. So companies like Goldman Sachs are building on top of Plaid, JP Morgan building on top of Plaid. And so it's been this fascinating journey where we have continued to try to build this infrastructure layer and focus on finding those individuals in the big companies or starting the new companies that are focused on creating new, better, differentiated digital financial applications. And then we kind of create the infrastructure that they need to do things like link in consumer data, verify consumer accounts, set up consumer funds transfers, collect kind of the consumer spending patterns, so on and so forth.
I'm wondering, you guys have been described often as kind of as the Stripe, not a fintech, but of kind of financial institutions, because obviously Stripe is a fintech company too. Is there a point, and obviously they're focused on payments, you guys are focused on what you just said. Is there a point where you guys, those lanes, which are kind of parallel, start to get closer and closer, and at some point you guys want to play in payments or they want to play in your space? Are you going to bump into them at some point?
It's kind of because API-driven businesses are a relatively new model. We actually see this very frequently where people say, well, you build an API and they build an API. Aren't those the same API?
Well, not just APIs, though. You're not building APIs like for professional sports streaming or something like that. You guys are in the same general world.
Yeah, I'll get that. Give me 1 second. This is a little bit, perhaps a bit of a roundabout answer. So you build an API, they build an API. When truly an API, that's a distribution strategy, right? And so the way that let's talk about commerce broadly. Stripe, obviously, like one of the most fantastic enablers of commerce on the internet. We think of things that you do with money, or I think of things that you do with money in two buckets. There's commerce, which is spending on goods or services, buying things, basically. And in commerce, we have these amazing networks. We have Visa, MasterCard at the lowest level, and Amex, Discover. We have fantastic software built on top of it. So Stripe leading the way, things like Square as well, Shopify, so on and so forth. And so we have a very strong digital set of enablers, or a very strong digital economy built on top of commerce. And that is one big chunk of what we do with our money. The other chunk of what we do with our money is financial services. And so you can think of it this kind of a bit like a Venn diagram, where there's maybe some overlap between commerce and financial services, but they're fundamentally different things that consumers are accessing them for. In the financial services bucket, we have things like savings, investing, lending, so on and so forth. All these things that we do with our money, that's not about buying things, at least not yet.
Visa, by the way, Visa is a lot about buying things. I just want to point out, Visa is a lot about buying things, yeah.
Fair enough. And so as we think about it, the financial services side of this Venn diagram, it doesn't have very many networks, or perhaps it has networks that you consider to be things like the ACH network. And so we think of what we're building as a fundamentally new style of network for financial services to enable financial services to one day have this amazing set of digital products that commerce already has. And so in as much as there's overlap, sure, we touch commerce bits and pieces, but the majority of our focus is on thinking about how does a consumer do all of the things that all of the things they need to do with their money that are not just about buying things.
You tweeted out the other day, somebody made a comment about corporate development, because I want to kind of move forward a little bit. And you talked about kind of the importance, not just of M&A kind of showing up out of the blue and oh, look, it's an acquisition offer, now let's do with it. But that you should actually be actively thinking about that all the time, not just we're going to go public or be independent forever. Before Visa, you guys bought a company called Quovo, and there's a lot of arguments I've heard, particularly from fintech venture capitalists, is that was kind of one of your master strokes, because you took out a company that could have been the plan B for a lot of other companies. Can you talk about that? And has that been as central as a lot of people seem to think it is to where you are today?
It's a great question. Quovo has been a very important addition to the Plaid team and company. So I'll back up to corp dev generally. I think it's fantastically important for founders particularly to have a great sense of what's happening in the market. Now, whether you call that team a corp dev team, a corporate strategy team, an analytics team, who knows what you call it. But for us, we lean heavily on this concept of like understanding what's going on out there in the market broadly, being able to draw really great insights and understand kind of where the future is going to be. And for us, that's a team that broadly does corporate development, business development, strategy, and partnerships. One of, again, a very exciting thing for Plaid. And one of the teams I lean on quite a lot. The acquisition of Quovo, it was a great stroke for Plaid, a really a kind of great outcome. The reason that we were intrigued by the Quovo team is that they built a set of products that were related but not overlapping to Plaid, and they had really deep expertise, or they particularly started by building a set of these products around wealth management and investing. Which were areas that we hadn't focused on. And then they expanded their product set into liabilities and analytics of your kind of like the liability side of your personal balance sheet. For Plaid, when we were founded, we focused basically exclusively on banking. So allowing you to link a checking account, allowing you to link a savings account. We realized that we needed to get this concept of a full wallet, a full view of an individual. And so it was a fantastic acquisition. We'd actually, had these talks about should we partners. They were way with it because they needed to offer full wallet. We needed to offer full wallet. We looked at partnership for a long time before, and it ended up culminating this acquisition. Which, frankly, the best part of it was the team that we were able to bring in, because it's rare to find people that think similarly, though not the same, about this market that we're so excited about. And it's rare to kind of be able to bring on a new set of effectively like founding team members to grow Plaid.
So let me talk about the other acquisition, which is the big one. Then we'll get into the pandemic and how that's changed you guys in fintech, which is obviously the Visa deal. There's been, you made a comment at one point that when you first got kind of some acquisition kind of feelers and stuff, your feeling was go away. We're busy, we're working here, we're building a company. But then you ended up with a competitive process. So how do you go from go away to, hey, everybody, give me your term sheets and let me see what you got?
So I can't actually go too much into some of the stuff that's under confidentiality. What I will say is when we first, so many companies, many startups are approached by M&A frequently, and the generic answer is like no, not yet. We're focused on this thing, or perhaps no, never. From our perspective, I am 100%. We are as a company 100% focused on our mission, on this concept of making money easier for everyone, helping financial services evolve from an analog to a digital system, and through increasing access, increasing consumer outcomes. For me, it was hard to see the fact that a big company might be able to accelerate us down that path. Frankly, I spent a little bit more than a year in consulting, and one of the common tropes then was that big companies are very slow at everything. And yeah, that's true.
The other trope, by the way, is that consulting firms charge those big companies money to not actually do any work. So it's too bad you only lasted a year. It's a good gig.
Or perhaps it's the reason I only lasted a year.
Fair enough.
Anyway, so big companies slow, and can they really enable innovation at scale? One of the unique things in talking with Visa was that they truly can do that. I really believe that they have launched a set of great products. They have a set of great team members. The way they think is very innovative and forward-leaning. And for me, the core concept was that they wanted to invest in Plaid. They wanted to allow Plaid to continue to grow. They wanted to give us the resources that we need. The entire thesis for the acquisition is that Visa accelerates Plaid, so that they will help us do the things that we're doing at greater and greater scale, and execute on them for more and more consumers, both domestically and increasingly internationally, where they have a great deal of presence. And so That was very intriguing because I could have that conversation and truly understand how we might accelerate on our mission and how we might do what we're going to do anyway, kind of move in the direction that we're already moving, but at greater pace with greater speed. So that for me was very exciting.
Are you scared at all? And this isn't about Plaid per se, but I ask this of any founder who sells a company to another big company, which is you've been the boss since Plaid began. You know, ultimately when a decision has to get made and everybody disagrees, you make the decision and you don't have to ask permission to anybody else or say, did I make the right decision? You're going to have a boss. Are you freaked out at all about that?
Well, perhaps it's an overstatement to say that I make all the decisions. In fact, I think my job is to make.
Everyone looks to you. Ultimately, if there's a question and everybody disagrees, they look to you, don't they? I assume they look to you to make the answer.
Of course, yeah. Yes, of course. However, you know, one of the ways that I think of my job is the more decisions I make, the more I'm failing at my job. So my job is to set principles, set direction, ensure that we have a clear strategy, and then all of the decisions should be made by the team. I'm a big believer that those that are doing the work, those that are executing at the lowest level should have the most decision-making authority because they're the ones that have the most intuitive knowledge of what's going on. If you ask me a question, should we do A or B? I probably have almost no context on either A or B. So I'd rather really the team be executing on it. But yes, again, my job is to set the strategy and ensure that the strategy is set for the organization, ensure that we have the right direction. The fortunate thing is, you know, in spending time with the Visa leadership team, you know, we have this long-term strategy already. They're excited about the long-term strategy. We've discussed this, and so I suspect, you know, frankly, minimal changes. But I will say, if any of us are making too many decisions, that's probably a sign of something that's wrong.
That's a good diplomatic answer. I'm going to ask one last Visa question, then move on, which is a technical one, which is you guys announced a deal in January, I believe. At the time, it said the deal was going to close within 3 to 6 months. 6 months is passed. Now Visa said in its earnings the other day, we'll close by year end. What's taking so long?
That's a great question. So as you and the listeners are likely aware, there's always regulatory approvals that have to go through. And unfortunately, given COVID and the shift to work from home, many of the regulators have needed extended timelines and timeframes in order to accomplish the work that they set out to do. And so, you know, the majority of the rationale is truly it's taking the regulators longer to do the things that they need to do, and this work from home shift caused many delays.
Okay, so let's talk about the work from home shift for you and for Plaid, not about the Visa piece of it, but just in general, which is what's been, you know, outside of the break in routine for you. What have you found to be the biggest challenge of running what has, I assume, become a very suddenly distributed workforce?
It's been a fascinating opportunity. I've really enjoyed learning how to shift to a kind of a dynamic, fully remote culture. Some of the learnings. So when we first started work from home, and Plaid, we announced work from home really early. I think we announced it like around the beginning of March. And the first 5 days, I was really worried about productivity. I was thinking, you know, we're going to be working from home. Are we going to be able to, you know, do the things that we need to do? Are people going to be distracted? So on and so forth. 5 days in, my view switched completely. The worry is not about productivity, but it's about burnout. Yeah. Because it turns out people are always on. You're always pushing. There's always something to do. And so for us, we've been thinking a lot about how do we make sure that Plaid is a sustainable place, make sure that people feel like they're not always on. I've actually been on this big hashtag no video push, where I'm saying, hey, you know, turn off your video, don't do a Zoom call, do a regular call, and go walk around, go see the sun, go be outside, go do the things that you need to do, maybe inside your house or outside. And so a lot of it has been thinking about how do we create this holistic view and really enable people to live their whole lives and integrate work and life, but in a way that really makes life sustainable. And that's really hard. That's a big challenge.
Do you? I wonder if we got a vaccine tomorrow and you know it's safe and you can go back. Do you plan to bring everybody back to the office at that point? Kind of what's your plan? You know, it's safe to go back. Does everybody come back? Does it become optional? Do you say, you know what, we were paying a lot for our lease, we don't need that anymore?
That's a great question. So we've actually been in the midst of a lot of discussions on this topic. I'll say that I don't have an answer for the company yet. I'll say this: I'm planning to go back to the office, and I know that much of the rest of our leadership team is planning to come back to the office. And I think there are certain things that work particularly well when synchronous. For example, you know, the highly creative brainstorming type of conversations, those work really well when synchronous, and it's likely that we'll end up with at least some portion of the leadership team back in the office, focused on kind of those planning-esque portions. However, for the rest of the company, we're trying to be thoughtful. Certain styles of, if you're working on a brand new product and you haven't done this before, you're putting a new team together, they're trying to go 0 to 1 on something, you really need that synchronous communication. And so for those elements, it's really crucial. However, for at scale selling of a product that we know how to sell, or at least mostly know how to sell, perhaps you don't need to be. And so we want to be thoughtful, team by team, function by function, area by area. But speaking personally, I miss the office. I really love seeing our team members in person. And so I'm excited to be back in an office at some point, hopefully soon.
This is just, people can't see that. This is because you're just terrified, because to your left, you have these giant stacks of books, and you're just scared you're going to get crushed by these things. And that's not
pretty much.
Fair.
Exactly. Yeah. I can't be in this office, in this room for too long, particularly not during an earthquake.
Yeah, that would be a problem. That would be a sad coda to Plaid. A weird one, but a sad one. So you have access. When I say you Plaid have an enormous amount of access, obviously, to consumer financial data and behavior data. I'm wondering, are there kind of some big picture things that you have seen as significant changes since the pandemic began, and if so, are there any within that you think are permanent, not temporal?
It has been a sea change in financial services since the pandemic began. Since frankly, people were confined to their houses, largely not able to go into offices, obviously not able to go into bank branches as much, despite the fact that some bank branches did stay open or find ways to serve consumers. A couple areas that were impacted. So first is the investing space. For the first couple months of COVID, and even now, frankly, for the first couple months, I think it was in Q2, there was something like a 300% increase in the number of users that are using digital investing products. That is just crazy. The trading volumes are through the roof. There's a bunch of
can I stop you there? Why do you think that is? Because there's a lot of people have a lot of theories about that. Why? It normally seems that in a moment of massive economic uncertainty is not the time that people start trading stocks.
I don't know. My personal hypothesis, again, not the company opinion, my personal hypothesis is that people need something to do, and they need something on which they can, maybe not compete, but like really be sucked into in a way that perhaps sports enabled us to do that previously. Perhaps watching sports or things like that. And without that, there's just, there's not as much of that element. Also, frankly, perhaps it could be people being really thoughtful about good buying opportunities. If you bought at the bottom, you could have done quite well. The short answer is I don't know. But
sorry to interrupt. Continue on the shift you're seeing. I was just curious because it has seemed like the very strangest time for somebody potentially who's about to lose their job or should be concerned about losing their job to start saying, I'll buy stocks now, as opposed to mattresses.
Well, one thing that I will say, macro has happened, is that people have tilted much more towards savings. So if the average household saving rate is something like 12 or 13%, it's shifted for a period of time, and it is still in that mode. I've shifted to like 35 to 50% of average household savings of dollars that are coming in. And these savings, yes, they could go into brokerage accounts where they're being invested, which is actually not a bad thing. Frankly, people are saving more money, and despite volatility, they still have access to greater capital, which is a good thing. More of a kind of a cushion if they needed it. But we've also seen greater savings rates elsewhere. So going back to your original question now, so increase in investing applications, obviously a massive reduction in lending. So despite PPP, where we actually built a product and it was a really exciting few weeks and months, and it's kept a lot of these businesses moving forward, which is a great thing. There hasn't been much small business lending. There hasn't been that much consumer lending, perhaps with the exception of mortgages, but consumer unsecured has largely fallen off with concerns about people's ability to pay. And one of the most interesting trends is actually use of digital financial applications by people above 50. So PayPal recently shared that people over 50 were their fastest growing demographic from March through April. And that kind of thing is endemic of what we're hearing from a bunch of other applications. So the banks themselves saying, hey, we're seeing everybody use our digital banking applications that didn't use digital banking before, and they're sticking. Right? They're continuing to use it. We're seeing neobanks, we're seeing fintech companies saying, hey, we're having massive sign-up rates from people that are in the older demographics that historically wouldn't engage as much with fintech, but because they have to try it once, now they're trying it, they're realizing it's easy, and they're sticking. And so I actually think that this will be a sea change, kind of like a step shift, a step function change for the adoption of digital finance. And the banks themselves are investing behind that. So we've heard a lot of banks saying, we're trying to accomplish our three-year digital roadmap in the next 6 months, which is great. It's a lot of work. It's great. And so my hunch is that, even if, say, a few months from now, we reopen the branches at scale, the demand for branch-based interactions is going to be quite a lot lower. And the demand for digital interactions is going to be quite a lot higher.
That all makes sense. My 70-something-year-old mother is now Venmos me money in exchange for groceries when I bring them to her, which is a brand new thing. Hasn't quite figured out how to do the grocery delivery part, but we're getting there. We're getting there. Can I ask, on the lending side, you talk about how obviously there's concerns about people being able to pay. I don't know if you're able to see this, but is it just volumes that you're seeing down, or are you also seeing application volumes down? In other words, is it that the banks and lenders aren't lending as much, or are they not lending as much because the application requests have gone way down because people say aren't buying cars as much? People are buying houses. I mean, home sales are going up.
That is true. Yeah. So I said with the exception of mortgage. So obviously the mortgage market froze for a certain amount of time. And certain types of mortgages just weren't being issued because they weren't being kind of purchased on the secondary market. And so it froze, and now it's coming back. It's actually probably going to have one of the best quarters in a few years, frankly, in Q3 of this year. On the consumer side, particularly consumer unsecured side, though I guess you could include perhaps auto lending in this as well. There are definitely there's kind of a slight reduction in overall application rate and a much more meaningful reduction in the overall funding rate of these loans. As you might imagine, the credit requirements are getting a lot tighter. And a lot of kind of the banks or large financiers of consumer lenders, so those that give consumer lenders money to then go lend out to consumers directly, they're tightening their requirements, which means that it kind of has a knock-on effect throughout the ecosystem.
The way you're talking, and you talk about how the banks are kind of accelerating their digitization, all seems like good news for Plaid. When the pandemic hit at the beginning, outside of the operations piece of the company and figuring out how to basically play on Zoom with everyone all day long, what was your biggest concern about the business itself, the actual business of the business?
That's a great question. Initially, a few things. Our primary concern, though, was around the solvency and the sustainability of our customers. So we have customers across a wide variety of different parts of the ecosystem. Yes, our investing segment is doing really well. Our lending segment wasn't doing that well. Are these lenders still going to be solvent, frankly? Are they still going to have the capital behind them that they need to in order to make the loans, so on and so forth? And a lot of them have really struggled. And so for us, our first intent is how do we go partner with our customers? How do we help them think through what's going on? How do we feed them information? How do we kind of help structure our relationships with them in a way that is long-term sustainable and allows them to invest in this period of uncertainty and ideally come out of it stronger? And on the other side, that was our first and primary concern. I should say our first concern was our employees. Second and primary concern was how do we go make sure that fintech not just sustains, but finds a way to take advantage of it? And what we're actually seeing is, first 3 months, heads down, stay alive. And that's what people needed to do. Now these 3 months, we're starting to see a shift towards how do I take advantage of this? How do I really serve my customers in a fundamentally better way? How do I rethink the way that my customers are interacting with me? And frankly, in some cases, rethink the products that I'm offering to the customers, kind of like shifting one product type, swapping that with another product type that might be much more relevant.
Zach, you've made a comment that every company is a fintech company, correct? That's
true. Yes.
Okay, you said that's true. Okay, so I want you to play this out and explain to me. Take my company. So I'm at Axios. We are an online digital media company. We don't sell subscriptions online, so there's not a commerce piece of that. How are we a fintech company?
It's a great question. So I think I will say most companies are a fintech company.
Are we the exception? Are we the exception to the rule?
No. I will say you do have those that pay you, right? So advertisers. I actually don't know the ins and outs of the media business, but I assume that the advertisers pay you.
They do. Right? I hope so. They're supposed to.
They should. Yeah. I would certainly hope so. And I would imagine that there's some sort of structure in which either you're putting the ads out before they pay you, or you're putting the ads out after they pay you. At some point, there's some sort of store of value on either side. And embedded in that store of value is some sort of risk model that someone built. Are the advertisers actually going to pay us, or is Axios actually going to kind of put out the ads that they say they're going to put? And in that small element, there's kind of fintech functionality. Also, the ways that the payments are coming in, your chances are you're using some sort of invoicing service. That invoicing service is a fintech company. Also, there's another part of it, which is thinking about payroll. So how do you actually pay the employees? How is that structured? Payroll companies, massive fintech companies as well. So perhaps it's something that Axios as a company outsources. However, you're touching heavily fintech in order to make that work. Perhaps another example that I think of frequently is a car dealership. We had for a certain amount of time, and it slowed down, but still exists. We had a bunch of car dealerships coming to us saying, "Hey, I want to help find a way to make on-the-lot car loans to the people that are buying cars. Can you help? Can you help figure out how we can actually set up that transfer? How we can validate their identities, validate their assets, so on and so forth." And that is something that I would never have thought of a car dealership as a fintech company, but it turns out they actually have an embedded fintech element within it. Same thing for you look industry by industry. Any company that has a repeat, ongoing financial relationship with a customer or with a supplier, there's an element of fintech embedded in there. And we're seeing now more and more companies say, "Hey, I have an engineering team that's going to go work on that element of fintech. I'm going to make that element great because that increases my supplier lock-in, it increases the quality of my suppliers, or it increases the customer the customer happiness on the other side."
I want to, since we only have a few minutes left, kind of bring back to where we started. At the beginning, we talked about how difficult it was for you guys to raise money at the beginning. The sale to Visa seems to, in part, have validated fintech for a lot of venture capitalists and seems to have helped increase valuations, not for companies that are direct competitors to you, but just the sector in general. It has become much, much more popular for people to invest in. From what you see, do you think the early stage fintech market is overheated, or do you think the heat is justified right now?
Well, I always think the heat in fintech is justified. I think that there could be more companies founded. I think there's more products to be created out there. When you think of the size of the kind of banking or financial services market, it is massive. And the quality of companies that are coming out continues to improve. Now, in one round versus another round, is the valuation too high or the valuation too low? It's quite hard to say. However, I think kind of when you zoom out and look at it with a broader view, I think that the success rate of fintech companies is actually higher, frankly, than most people, particularly most VCs and potential founders would give it credit for. I don't think the failure rate is that 99% that everyone says. I think it's perhaps closer to 50%. And so if that's true, and then if fintech and financial services as a whole continues to grow at the pace that it's been growing over the past few years, I think there's quite a lot of opportunity. So overpriced, underpriced, I don't know, but I think there should be more companies founded and more companies funded as well.
There's a question in the chat that came up, and I want to kind of take a different version of it, I think, which is around data privacy. Obviously, every company like yours, there's questions about, what information are you taking, what information you're not taking, sharing, et cetera. Can I ask a bigger picture question, which is, people like me write about this. It gets talked about. Politicians talk about it. But when you think, for example, of the Equifax hack, which was a massive, massive thing that probably affected me, it might have affected you and most people, but they still do business. And it didn't seem to ultimately matter. Is this stuff that people complain about, but in the end don't actually care about, that we've all kind of baked into our financial lives, that our information is, quote, out there? And whether it's you who have it or Equifax or a hacker, we've just kind of accepted that our information is no longer our own.
Whether or not people have accepted it, I don't think it's something that we can or should or ever will as a company take lightly. So whether or not people assume that their data is being secured, not secured, I don't think it's a company's place to make an assumption there. I think it is something that for us as Plaid has always been core and foundational to how we think about it. In the earliest stages, when we were hiring our first engineers, frankly, we focused on hiring people with great security backgrounds and spending a bunch of time with people that had very strong privacy backgrounds. For us, this concept of data ethics has been crucial throughout the entire history of the company. We focus on only collecting the data that consumers permission us to collect, and obviously that would be the only way we could get any data. Using that data for the exact purpose that the consumers have requested that, and of course never selling or sharing or renting data for anything other than exactly what the consumer told us to do. And in that sense, I think it is the responsibility of us, yes, as the platform provider to the ecosystem, to not only hold ourselves accountable to it, but to hold the entire ecosystem accountable to the standard of, you have to do things in the best interest of the consumer, the absolute best interest of the consumer. And so for us, it's something that I personally care very, very deeply about. It's something that I've spent a ton of time on, and we as a company continue to do so. However, it's a totally new space. We are creating the rules for the first time, right? What we do was not done. It was not an industry before particularly Plaid and companies like Plaid existed to do it. And so, we have to both create the line and walk the line at the same time. So, we always welcome any and all feedback on when and where and how we could be doing better and what we could be doing more. But it's one of those topics that, frankly, I love talking about and I love learning about. And I think that we as an industry can set a fantastic standard for consumers.
Very fast. Final question. When is the last time you walked into a bank branch to do business for yourself, not for the company?
To do business for myself? So there's a funny story where I actually have 85 bank accounts. Because I test them on all sorts of different apps, and you have to understand how is this bank.
Okay, but for you, like you were like, I need to go into the branch because I either need to get cash and don't have an ATM card or whatever it is. You went into a bank for the purpose, not to understand how Plaid works better, because Zach needed something from a banker.
Probably about 2 years.
About 2 years. Zach, thank you very much for joining us.
Yeah, thank you so much. This was fun.
I don't know.
I'm not sure if we're still live.
I have no idea if we're still live. We are. We're just going to talk because this is how we started. Apparently, we screwed up. So yeah, I have no idea.
This is fun. Thank you, Dan. That was really good questions.
No, thanks for joining. And I'm actually going to. Oh, we are still live. Hi.
We're still live. Great.
Hi, everybody. We're still live. We're not supposed to be. We've been told we're not supposed to be. But yeah, we're.
Hey, Bo. There we go.
Hi, Bo. Good to talk to you too. All right. Fair enough. I don't.
Do we just like click X and
I think we do. I think that's what we do, because otherwise they said we're going to get cut off like in the middle of a sentence. So I don't want to start asking you something else, and then we're going to get, okay. They want keep going. We can keep going.
Did someone say keep going? No, I think we're done.
I think we're done. Yeah, that's that. All right.
Okay.
Thanks, man. Appreciate the time. We'll talk.
This is fun. Cheers.
Bye.